And in our business stories, shares in Emaar properties suffered their biggest fall in more than 8 months yesterday, as Dubai's biggest listed property developer disappointed investors with a dividend of 15 fils per share. Emaar shares fell 3.8%, their biggest fall since June 26 on the first day of trading in the Middle East after the UK's Brexit vote sent stock markets worldwide into free fall. At yesterday's closing share price of 7 dirhams 36, Emaar's proposed dividend for 2016 of 15 fils per share works out to a yield of 2% of the share price. In comparison to other companies' dividend plans that were also released yesterday by the Dubai financial market provided higher yields. The cooling company Tabreed raised its dividend to 6.5 fils per share from 6 fils, bringing its yield to 3.5% of the share price at yesterday's close. And the bank Mashreq kept its dividend constant at 4 dirhams per share for a yield of 5.3%. Emaar's unexpectedly small dividend, the same amount as for the previous year, came despite the company making higher profits than expected last year. Last month, it reported that net profit for the 3 months to the end of December 2016 increased 56%, climbing to 1.61 billion dirhams from 1.03 billion dirhams a year earlier, as the company benefited from the reversal of a 301 million dirham loss booked against the Address downtown Dubai hotel the previous year on the back of an insurance payout. Emaar yesterday published its consolidated results, showing that revenue from villa sales more than doubled last year compared with a year earlier. The developer said revenue increased by 55.6% to 4.15 billion dirhams in 2016 from 2.66 billion dirhams a year earlier. At the same time, Emaar said revenue from apartment sales increased by 13.9% to 4.08 billion dirhams from 3.56 billion dirhams a year earlier. And the amount of money it received in rent from its leasing portfolio of homes, offices and shops increased by 10.4% to 4.54 billion dirhams from 4.11 billion dirhams in 2015. Higher fuel and utilities bills pushed consumer prices up by an annualized 2.1% last month in Abu Dhabi. In its monthly update, the Government Statistics Centre Abu Dhabi revealed that the consumer price index for February rose by 0.1% from the previous month, with about 3/4 of the rise attributed to the largest components of housing, water, electricity, gas and fuels. While housing costs have been falling, fuel-related costs have been rising, as oil prices have advanced by more than 20% since late November. The other main driver of higher prices last month was the rising cost of transport, which is the second largest component in the CPI. Notably, the Statistics Centre's report said healthcare costs accounted for the biggest annualized price rise last month of more than 10%, although the category has a small weighting in the overall index. The statistics unit also indicated that there was a big price drop of nearly 10% in the recreation and culture category, with prices in the separate restaurants and hotels category dropping by 1.5%, presumably as discretionary spending continues to be squeezed by the retrenchment that followed the oil price slump in the past 2 years, with the attendant drop in expatriate employment. The Dubai Land Department is working to introduce a new rental security deposit form which will ease the process of refund for tenants. At present, a security deposit refund, which are generally a month's rent, is limited to mutual agreements with the landlord, with the deposit amount refunded only after the landlord assesses the damage to the apartment, with the cost of repair deducted from the deposit. Article 20 of Law Number 26 of 2007, regulating the relationship between landlords and tenants in Dubai, states that a landlord can obtain a maintenance deposit amount from tenants to guarantee maintenance of the property at the expiry of tenancy contract, provided the landlord undertakes to refund the deposit or any remaining amount upon expiry of the tenancy contract. According to a senior government official from the Dubai Land Department, it is currently working on a new security deposit form in which landlords will have to refund the deposit within a reasonable time. The department is also working on a new unit handover form, although no date for the new forms was given. The DLD has made it mandatory for all real estate agents to use the new unified rental lease forms from March, a move that it said will better regulate the real estate market and allow authorities to track real estate rental index. And the UAE has for the first time broken into the world's top 20 list of countries with the highest concentration of ultra-rich residents, with its billionaire population jumping by more than 30% in 1 year. A total of 21 individuals with at least $1 billion are now living in the UAE, up from just 16 a year earlier, making the country one of the biggest billionaire capitals in the world, according to a new report by Hurun Research Institute. The growth in ultra-rich population has likely been triggered by increased migration of residents with huge bank accounts and assets into UAE. Last year alone, India saw 32 billionaires left, of which the UAE, UK and USA were the preferred destinations. The China-based private research firm has been tracking billionaires' fortunes in US dollars for the past 6 years. Overall, China trumped the United States for the second year running, as the Asian country saw 41 new billionaires to reach a total of 609. Most billionaires in China are living in Beijing, accounting for 94 individuals, also the highest in the world. Among the cities monitored, New York remained a favorite haven for the rich, ranking second overall, followed by Hong Kong, Shenzhen and Moscow in the top 5.